Good morning, students. How are we all doing? So I welcome us to another class, and our expectation today is for us to be able to catch up with whatever we have. So we are going to be moving into our third topic, which is incomplete records, which is also known as single entry system. Single entry system in accounting. Single entry system in accounting. So it is expected of us that in this lecture, every student should be able to understand fully what incomplete record is, and they must be able to explain in details the single entry principle. The single entry principle. At the end of the lecture also, you must be able to distinguish between an incomplete records and your double entry record or double entry principles. And comfortably, you must be able to prepare what is called a statements of affairs, and also to determine your what capital, because the end result of a statement accounting is what statement of affairs rather is for you to be able to what to determine your capital. And at the end of this lecture also, you must be able to, even though you have some records that are not complete, you must be able to figure them out. You must be able to treat each classes. You must be able to treat each illustration to determine what is missing, how to fix it. And also comfortably at the end of this lecture, even despite the fact that you have incomplete record, you must be able to solve some problems which will comfortably make you to prepare your what your financial statement, despite the fact that some records are what some records are missing. So by way of introduction, accounting record, as we all know, even for double entry principle, we know that for every debit entry, there must be a what? A credit corresponding entry. But there are some cases where we have incomplete record, which we call the simple entry accounting system. This is in a rare occasion, and we can't shy away from the fact that it happens. It happens. And for a business to be able to maintain both your cash, your bank, your debtor, your creditor, your assets, your expenses record, even while they are missing, you must be able to find a way around it to ensure that your financial transaction is what is complete. And that is why we are doing this. In one leg, you have a transaction which is expected of you to prepare your cash and your sales. But unfortunately, you were only able to record for cash. You couldn't record for sales. So does that mean the accounting class or the accounting preparation or presentation will not be done? No, it will be done. It will be done, which will lead you to you preparing a final account despite the fact that you have some elements missing or not properly recorded. And why are we even looking at this incomplete record? We are looking at it because only selected transactions will be recorded. Will be recorded. You know, I normally say this in class that there are some questions you will see, and at the end of the day, you will be like, oh, sorry, we don't have capital, we don't have debtor, you don't have this. I always tell you not to bother yourself about it. But there are some rare occasions that you only need to find your way around it. You only need to find your way around it. In a situation whereby you have some missing ledgers, you don't have any other choice than to use the principle of incomplete record. Incomplete record. And as I said earlier, this negates the principle of double entry, which I cited an example of you having that is an illustration expected of you to present a cash ledger and a sales ledger. But unfortunately, the only thing that was recorded was just your what? Probably your cash and only your sales. And only your sales. And then for a complete trial balance, normally, all this cannot be extracted. Why? Because some items are missing. So items were not properly posted. So it is expected of you to have a scanty trial balance. It is expected of your trial balance not to what? Not to balance. Not to balance. And in a situation whereby you have available evidence, which are always expected of you to find your way around it to ensure that, oh, this gets balanced. Even in the missing record, it is expected that the incomplete record principle should be what? Should be adopted. And as time goes on, you are going to be seeing how you are going to be applying your mathematical skill even on this. And there are some characteristics of a single entry, which is an incomplete record. So as I said earlier, that it negates the principle of what? Double entry. It negates the principle of double entry. And it definitely have what we call incomplete ledger. Incomplete ledger. In a situation whereby it's expected of you to prepare 2 ledger, 3 ledgers, at the end of the day, you're left with 1. When you're expected to prepare 3, you are left with 2. So another characteristic is what? Incomplete ledger account. And with you having an incomplete ledger account, it is expected that the trial balance generally cannot be prepared with directly. Because if you do, it will make your trial balance not to what? Not to agree. Not to agree. And even despite the fact that you have some classes that are missing, personal accounts of debtors and creditors can exist. They can still exist. By the time we get to class and then we start doing some calculations, you see the way we always find our way around it. And the most beautiful thing about it is our cash and bank record are, in most cases, always available. Always available. And I told us earlier that in incomplete record accounts, it is expected of us that we should, the end product of a statement of affairs is our capital. So capital is always determined with the help of what? An incomplete record. And profit may be determined by comparing your opening and your closing capital. Your profit is always, there'll be an example that I will be giving after this class. And we are going to be comparing in a situation whereby we have our opening capital, our closing capital, and at the end of the day, these are the critical tools, or these are the critical classes of accounts that is expected of us to calculate our what? To calculate our capital and our profit also. And then what is the advantage of this incomplete record? What is the advantage of this incomplete record? I can categorically tell you that it is the most simplest part of accounting that you can ever prepare. It is the most what? The simplest that you can ever what? That you can ever prepare, because it requires a less accounting knowledge. It requires a less accounting knowledge. Just a minimal principles. Just minimal principles, and it helps you to navigate. But what is most important is there are some mathematical principles that we are going to be bringing in into this. And where for a small business, this will be very, very cheap to what to prepare, very cheap to prepare, because basically it's what we use in our day-to-day operations. So that is why initially the characteristics has to do with what your cash, your inflow, your outflow, your bank, and your cash generally, generally, generally. So what is the disadvantage? First and foremost, we don't have all the details. The records are not what? The records are not complete. And in a situation where you have incomplete record, it is always difficult to identify error. It is always difficult. In a situation whereby you even have more than one error, always difficult, always taxing. And in this case also, so far you can identify error, it will be difficult for you to what? To even detect fraud. It will be difficult for you to detect fraud, even though in a way we ensure that profit is attained, but that doesn't mean your record is what is complete. Is complete. And in most cases, our financial positions are always what difficult to determine. They're always difficult to determine because some parameters are missing, some accounting records are missing. So it is what it is. Our balance sheet is always difficult in a way to what to determine to determine. And then please note, this is not suitable for a very large businesses where you deal with a lot of classes of accounts. It is not suitable. It is not suitable. And performance comparison, relatively, it is very low. It is what? It is very low. Very low. And let's briefly look into the incomplete record and the complete record, which has to do with what? With our double entry and single entry. So as I said earlier, for incomplete record, it is not, the details are not full, they are partial. They are partial. They are partial. So in the case of double entry, it is expected of you to have your what? All debit transactions and all credit transaction. And for incomplete records, the trial balance generally are not always available. Why? Because your classes of assets are not complete. They are not complete. But the reverse is the case for double entry. The reverse is the case. Your trial balance is expected that you should be what? It should be prepared, and it should what? They should agree. Your debits and your credit side should what? Should agree. And then for incomplete record, profits often require reconstruction. It is necessary that there are some adjustments that are needed to be made before what? Before you can attain your profit in an incomplete record. But reverse is the case for double entry. Income statement is prepared even from the ledger balances. Income statement is prepared from what? From the ledger balances. We dealt with this last semester. So I think by now you should be able to what? To relate. You should be able to relate. And for incomplete record, it is mainly suitable, as I said earlier, for small businesses, mainly suitable for just small businesses. But whereas in double entry, it is expected that a larger company is expected to imbibe with the double entry principle. Double entry principle. So for incomplete record, the first account that is expected of you to prepare is your statement of affairs. Statement of affairs account. And when preparing your statement of affairs account, please bear it in mind. I said earlier that the end result is to determine what? Is to determine your capital. Please, I will say it again. The end product, or why are we even preparing the statement of affairs. Statement of affairs is the first thing you prepare in an incomplete record transaction. And why are you preparing it? You are preparing it solely to determine your what? To determine your capital. And definitely a statement is expected of you to show your what? To show your assets, your liability at a particular time. And the formula, if you can remember very well, let's just take a little bit step backward to check how our balance sheet looks like, our final account. How does it look like? On the debit side, you have a portion of your capital, your equity. Then at the down part, you have your what? Your current liability. Then at the credit side, you have your fixed assets, you have your current assets. So as I said earlier, for you to get your capital, it is expected of you to do your what? Your total assets minus your total what? Liability. Total everything you have under your assets to your what? Total liability. And in this scenario, you might not necessarily need to prepare your balance sheet. The only thing is for you to be able to identify them in any illustration given, pick them out to determine your what? To determine your what? Capital. And I said earlier that there are some mathematical tools, principles that you are going to be adopting here. And the mathematical principle is your subject of the formula, which shows that in a situation whereby you have your, for example, using this illustration, you have your capital and you are asked to find your total assets, which shows that you are going to be making your total assets your what? Your subject of what? Of the formula. Your subject of what? Of the formula. And it is also especially you. So in a situation, sorry about the break in transmission. So in a situation whereby you have your, in a situation whereby you have your assets, you have your inventory, you have your motor vehicle, you have your receivables. So this is just how do I put it? This is just an example to buttress what I am saying. So here, where we have our assets, our cash, our inventory, our motor vehicle, our receivables, if we had all these 4 items together, our total asset is going to be 700,000. And a situation whereby we have our liabilities, our trade payable here, we have 180,000, our loan 70,000, adding it together to have a total sum of liability 250,000 naira. So now I have my assets, I have my total liability. How do I get my capital? My capital is going to be what? My assets, based on the equation given earlier. My assets minus what? Minus my liability, giving us what? 450,000. So in this situation, in this scenario, where probably capital is given to be 450 and our assets is given to be what? 700, which is expected of us to make our total liability to be what? To the subject of the formula, which shows that our total liability is going to, it is expected of it to be equated to what? 250,000. 250,000. So I said earlier that we are going to be having opening and closing capital. Opening and closing capital. There is also a formula for opening capital. How do we get our opening capital? Our opening capital is expected that our opening assets minus opening was liabilities. So the only difference is what I am starting with. So if it is expected of me to get the capital that I'm starting with, it shows every detail that I expected to be used in getting my opening capital are what the assets that are what that I'm using to start the business. And the same thing with closing capital. Closing capital is expected that it should be what at the end of the year. So for a good illustration, we can say our opening capital is always gotten probably 1st of January 2024. And our closing capital is gotten from 31st December. So in a situation whereby you have an illustration and you have capital as at 1st of January and capital as at 31st of December, it should tell you something about what is expected of you to do. So your opening capital basically represents what the owner's net investment at the start of the period. At the start of the period. So if the question says it's starting 1st of January, or some can be maybe 1st of April, please just take note of what? Take note of the dates. And your closing capital represents what? The owner's net investment at the end of the period. At the end of the period. And this will be what expressly stated. And in an incomplete record or a single entry record, how do we get our profits? How do we get our profits? Since it is one of the characteristics is profits, to ascertain your profits, it's usually difficult. So how do we go about that? The formula for that is your closing capital plus drawings minus additional capital minus opening capital. Your closing capital plus your drawings minus additional capital minus opening capital. So this gives us what? To attain to our profits. To attain to our profits. It could be profits, it could be loss. So in a situation whereby you have a positive answer, it shows is what? A profit. And in a situation whereby you have a negative answer, it shows is a what? Is a loss. It shows is a loss. And drawings is coming in here because they are added back. They are added back to our capital, because in a way it helps to even your drawings. Definitely, it reduces your what? It reduces your capital. And for the illustration we have for this profit, I can say that so let's pick our book now and our pen, and we have every other details in this formula, but now can we find an answer to opening capital? Calculate using this formula, determine the opening capital. Determine the opening capital using this formula, which shows that you are going to be making the what? The opening capital your what? You are going to be making the opening capital your subject of the formula. So calculate the formula that is expected of you to ascertain your opening capital in this formula and put it in the comment section. That is number one. Then number two, determine the drawings. Determine the drawings using this same formula. Please watch my languages. I was saying you should determine. Most of the time in an incomplete record, it is not Probably when you have it complete, it is not expected of you to, probably to calculate. We always ascertain. We always what determine. Which other language? The one I can remember for now is for you to ascertain and determine. That is what basically, even in this profit and loss account, I would just say to ascertain the profits or determine the profits for this small business. For this small business, please let us take note of that. So for the two questions I asked now, please let's take a pause now and solve it and put the correct answer in the comment section for me to have a view about it. So this is just the workings. This is just the working from the initial example that was used. The initial example that was, so in this scenario, you have your opening capital to be 500, your closing capital to be 700, your drawings 100,000, additional capital 50,000. So how do you ascertain your profits? The profits is in the sum of 250,000 naira. So after getting your capital, and then most of the time, last semester we're able to do our prepayment, accrued, and all that, every of our adjustment. You are going to be bringing that knowledge here also. There are some adjustments that are expected of you to also do. When we get into the practicability, you are going to be having a better understanding about it on our sales, purchases, our debtors, and the likes. So for our trading account, under an incomplete record, it is expected of us to what? When we are asked to calculate cost of sales, we have another formula here. Your opening entry plus your purchases minus closing inventory. Your opening inventory plus your purchases minus your what? Closing inventory. And how do we get our gross profits? Our gross profits, take it back to what we did last semester on trading accounts. Your sales minus cost of sales. And I said initially that you are getting your cost of sales to be what? Opening inventory plus your purchases minus closing inventory. And reverse is going to be the case when you are getting your what? Your gross loss. Your gross loss, which is going to be your what? Your cost of sales minus what? Minus your sales. And if you notice, most of the time, our sales is always in a large volume, which is expected of you to get a negative outcome for your what? For your gross loss. For your gross loss. So after you might have gotten your capital and every other details, it is expected of you to move into your income statement. Your income statement. And when you are starting your income statement, you should be able to start with what? Either your gross profit or your gross loss. Either your gross profit or your gross loss. So another classwork here. For your gross profits under your income statement, where do you put it? Are you posting it at the debit side or are you posting it at the credit side? If it is gross loss, are you putting it at the debit side? Are you putting it at the credit side? So I want us to make a pause now and drop the correct answer into what? Into the comment section. And as we all know, the way our income statement is, it is expected that what? Every other income is what? Every other income, every other expense, every other income are what? They are added. They are added at the credit side, and at the debit side, every other expenses are what? Are also what? Are also deducted from our income to be able to get our what? To be able to get our net profits. And how do we get our net profits? And how do we get our net profits? It's going to be our gross profits plus other income realized by the business minus what? Minus expenses. Minus expenses. And just to refresh your memory, a typical expenses, they are what? They are our salaries, our rents, insurance, electricity, transportation, repairs, depreciation, advertising, as the case may be, as the case may be. So after this has been done and you've been able to get your net profit, then I feel comfortably you should be able to move to your what? Statement of financial position. And please note, your statement of financial position is also known as your what? Your balance sheet. Your balance sheet. And looking at the accounting equation, which shows that for your balance sheet to agree, your assets must be what? Equal to your capital plus your liability. Your capital plus your liability. So then the third, should it be the third or the fourth? The fourth assessment will be determine your capital using this accounting equation. Oh, so we've been able to get our capital to be our assets minus liabilities. Our assets minus liabilities. So using this formula, just take a pause now and determine your liabilities using what? This capital. Determine your liabilities using what? This accounting equation. Just take a pause now and drop it also what? In the comment section. In the comment section. Please let's also take note that even in our current liability, our current assets, our capital, it is expected of us to work, make some adjustments also. It is expected of us to make some adjustments also. And there are some adjustments that are expected. We should know that definitely, I said it earlier, that our drawings will what? Reduce our capital. Our drawings will reduce our capital. And any additional capital will definitely what? Increase your capital. Any additional capital will definitely what? Increase your what? Your capital. And in the aspect of depreciation, please take note, our depreciation is always treated what? As an expense, because it reduces the amount of your what? Of your assets. It reduces the amount of your assets. So the number at which the amount of your assets is reduced should what? Should be treated as an expense. Should be treated as what? As an expense. And also, your bad debts, we also what? We also reduce any receivables. I know we all know what our bad debts is. It always was reduced, not until it's being recovered. That is when it will what? It will add up to any expenses. But definitely, it is going to reduce your what? Your receivables. Your accrued expenses. We increase your expenses, and we give room for liability. They will give room for liability. And your prepaid expenses will automatically reduce your what? Reduce your current expenses, and should be treated as what? As an asset, as a current asset, as a current what? Asset. And then so this leads us to the difference between your statement of affairs and your statement of what? Final accounts, or your financial position. So your statement of affairs, that one is prepared. That one is what? Is the first thing you prepare for what? For an incomplete record. Your statement of affairs is the first thing you prepared in an incomplete record. And your statement of affairs, I told you, the end product of this is to determine your what? To determine your capital. To determine your capital. While your financial statement or your financial position is prepared where you have a complete double entry record. And it is always presented at the last. It's presented at the last. That was why initially you will see me interchanging it for your final account. your statement of financial position definitely should report your what? Your assets, your liability, your equity, your capital from what? From the accounting what? Record. So the letter generally provides what? A more reliable what? Financial information. As I said earlier, a more financial information. So this is just a, like, well, I won't say it's comprehensive for the purpose of this class. We have this, so we can just take a pause and just take few seconds to look through, to look through, to look through, and I know with this we should be able to prepare meaningfully our statement of affairs. We should be able to prepare our what? Our income statement, and we should be able to proceed to what? Our balance sheet. Even though I'm still going to be giving a more detailed illustration, a more detailed illustration. So this is a solution to the example given earlier. To example given earlier. So with our familiarization with the double entry, we've been able to, it is expected of us that for double entry, all records are going to be examined, all records are going to be checked. They are going to be what? They are going to be checked. And determining opening capital using a what? A statement of affairs. So even though you don't have it, it is expected of you to use the formula that I gave you to find your what? Your opening capital. And there's some adjustment that are expected of you to carry out under your debtor, your creditor, your cash, your bank. And it is expected of you also to determine every missing sales and purchases for you to have a good final account. Then you can now say, okay, I can proceed to preparing my trading accounts, my income statement, and my statement of financial position. You must be able to reconcile all figures relating to your what? Your capital, relating to your what? Your profit figure. It could be profit and it could be what? It could be loss. So for examination consciousness, you should be able to read through every question what? Carefully in a sit, because most of the time you are going to be having a scenario question, which is expected of you that every parameter, every analysis should be what? Should be pointed out carefully. When everything is pointed out carefully, you should be able to say, oh, this is an asset. This is a liability. Oh, this person should be treated as a debtor. Oh, this person should be treated as a creditor. Oh, this falls under the categories of the cash. Oh, this is an income. This is an expenses. Oh, this is a drawing, or this is a capital. And after all has been done, comfortably, you should also be able to what? Prepare your what? Your statement of affairs, because it is what? It is required for a what? For an incomplete record. For an incomplete record or for a single entry record. And as I said earlier, every adjustment that I expected of you to do should be done thoroughly. Thoroughly. Workings are expected to be what? Shown, and check your what? Your final figures to be able to satisfy with accounting equation. And how do you get that? Just go back to making so the subject of the formula. You should be able to say, oh, if I add up this to this, I should be able to get this. For you to do your check and balancing, I feel and I know your understanding about the subject of the formula should be able to address that. And please do not assume any missing figure without testing any consistency. Please don't assume. If you are not given, it shows it's expected not to be treated. And if you are not given, it shows you are bringing in your mathematical tools of making subject of the formula. Don't say because I'm not giving drawings, Yeah, let me assume my drawings. No. Rather make your drawings what the subjects of what of the formula. So I hope you understand very, very well. And please let us get familiarize ourselves with the formulas that are expected. So now we are not drawing any accounts, we are not doing debit and credit yet, but just get the foundation right. If you get the foundation right, then your practicability will be what will be more simple. By the time we get to class and we start doing it, your capital, you must be able comfortably be able to ascertain your capital, your profits, your cost of sales, your gross profits, your assets, and a situation whereby you have your cash received, your return inward, return outward, comfortably. You must be able to what? You must be able to deal with that. You must be able to deal with that. So, in conclusion, I will say that incomplete record do not mean that financial statements are impossible to prepare. They are not impossible. It is just expected of you to that, okay, even when I'm giving all these parameters and one is missing, how do I get that one? Bring in your mathematical what tool of what making one, the one that is missing, the subject of the formula to get it. An accountant, the accountant constructs in missing information is usually available as an evidence for you to find a reconciliation even in your accounting presentation. And there are some key techniques that are expected of you, even in your statement of affairs, in your debtors, in your creditors reconciliation. It is expected of you. And please, let's also take note that a systematic approach allows the preparation of what of reliable, reconstructed what financial statements, a good financial statement. So that doesn't mean even though you have an incomplete record, you can't have what a final account, or you can't have a good financial position, a good financial position. So this will bring us to the end of this class. And I know some of us we have questions. So our questions are welcome. Just drop them in the chat box. Drop them in the chat box so that I can respond to them. I can respond to them properly. So till we meet in class next week by God's grace, I wish us a fruitful day ahead. Bye.